Capital gains tax, also known as CGT, can be an intimidating subject to understand. To help you get to grips with it, we've put together a three-part series on this often misunderstood tax. Starting with this video that will explain what exactly is a chargeable capital gain, who is chargeable to capital gains tax, when is CGT charged and what are the current rates, and finally the annual and other exemptions. Now, before I get into today's video, be sure to hit that subscribe button as well as the notification bell to make sure you're kept up to date with all our latest content. This really helps us to produce more helpful videos and to get you free quality advice from real qualified accountants. As the name suggests, capital gains tax is a tax on, you guessed it, capital gains. Capital is wealth in the form of money or property that is used to make more wealth, and a gain is an increase in the value of that wealth. Capital gains tax was first introduced in the UK in 1965, and a CGT liability may arise when a chargeable person makes a chargeable disposal of a chargeable asset. But what is a chargeable person, asset and disposal exactly? To answer this, we put together a free PDF guide explaining all three in much more detail. Click on the link below to head to our website and download it for free. In short, you become chargeable to capital gains tax if you are an individual who is UK tax resident, you are a trustee of a trust or settlement, you are the personal representative of a deceased person, and finally, you are a business partner in a partnership. Companies such as limited companies and limited liability partnerships are not subject to capital gains tax, but pay corporation tax instead on any chargeable gains of disposal of assets held within the company. Other organisations such as registered charities, local authorities, amateur sports clubs, health service bodies and registered pension schemes, to name a few, are all exempt from capital gains tax, subject to certain restrictions. In very basic terms, if a chargeable asset is sold for more than the purchase price, profit has been made and so a capital gain arises. It's important to note that only the gain or profit is taxed, not the full amount received. And don't forget, a capital loss can also happen. This is when the reverse situation happens and the disposal proceeds are less than the cost of the asset, thus resulting in a loss. Capital losses don't have to be wasted and can be used smartly to reduce your overall tax bill in the right circumstances. So let's illustrate a capital gain with an example. If you, as a UK resident individual, bought some listed shares, say for £1,000 on the 1st of January 2021, and went on to sell them for £6,000 on the 30th of June 2021, the chargeable asset is the listed shares, the chargeable person is you, the UK resident individual, and the chargeable gain in this simple example is £5,000, ignoring the annual exemption and other deductible costs. Remember, it is not the full £6,000 that is subject to capital gains tax, only the gain, so £5,000 in this case. Now, because the chargeable asset was disposed on the 30th of June 2021, it has to be declared and reported in the 2021-22 tax year self-assessment return. And what's more, it is the net gain that is subject to capital gains tax. So in our example above, let's suppose you incurred £500 in broker fees to sell your listed shares. You can deduct this cost plus any other incidental costs relating to the disposal and allowable expenses. Therefore, only £4,500 will become subject to capital gains tax. The current capital gains tax rates in 2020 to 21 are as follows. Residential property for an individual basic rate taxpayer is 18%, and for a higher rate taxpayer it is 28%. And the main CGT rate, which applies to most other assets, is 10% for basic rate taxpayers and 20% for higher rate taxpayers. Most individuals are entitled to an annual exemption for CGT purposes. For 2020 to 21, the exemption is £12,300 for the year. The annual exemption means that no CGT is payable on gains up to that amount each year. And the good news is, if you have generated a total capital gain of up to or less than the £12,300 annual exemption, then you don't have to formally declare or report your capital gain to HMRC. Spouses and civil partners also have an annual exemption, so for jointly held assets, there is scope for exempting £24,600 worth of gains in 2021. The same principle will apply for future tax years, so long as the annual exemption is not taken away by the Chancellor. The annual exemption is applicable to the current tax year only on a use it or lose it basis. It cannot be carried forward or taken back, so anyone planning to make a series of disposals should consider timing the sales between 2 or more tax years to use up as much and as many annual exemptions as possible. Of course, this is only possible with certain assets such as shares and is far more difficult to do with assets such as residential or commercial property. Now, if you are a trustee, then you are entitled to an annual exemption equal to 1/2 of the exemption available to an individual. So for the 2020 to 21 tax year, this is £6,150. However, trustees of settled property held for people with disabilities or others in receipt of attendance allowance or disability living allowance are entitled to the full annual exemption.